Hello everyone. Today is the last lecture for chapter 7 that we have been doing from past few lectures, and today we are going to end this chapter. And the sum that we are going to do today is not a short sum, not even a long sum. That is, what I mean is it's not very short nor it is too long. Okay, so chapter 7, part 1, dissolution of partnership firm. The last session, please pay attention to this. And from next lecture onwards, we are going to start with a new chapter, probably from part 2. Okay, so the illustration that we have taken is illustration 9 for today. Please watch till end for complete understanding. Okay, so you are provided with illustration 9 on your screen. It says total assets of firm of Amar and Akbar is 6 lakh, in which cash is included of rupees 40,000. Total assets are 6 lakh and cash in it is of rupees 40,000. Yeah? Net assets of the firm are rupees 4 lakh. The proportion of capital and general reserve is 4:1. The capital of Amar is excess to capital of Akbar by rupees 80,000. The realization account loss is rupees 80,000. Firm is dissolved. Prepare dissolution account. This means prepare necessary accounts at the time of dissolution. Now you might be thinking that ma'am said that long questions from this chapter are not expected. But this seems to be a long question, yeah? But this is not that long. It is a little bit long sum. And the question, if it is asked in examination, this kind of, it will be shortened and then asked. That means this sum will be divided into parts, in several parts, and they can ask you the related question. They'll ask you to prepare realization account or prepare balance sheet, yes, but the question will not be too long, for sure. So here the question is given in the paragraphed form, if you see, and you have to prepare the balance sheet, the very first thing. Because if you know, the question in every sum, yes, it consists of the balance sheet which highlights the position of the business. Yes, that what is the position of assets, what is the position of liabilities, etc., etc. Yeah? So that thing is presented in the form of a paragraph here. Alright? So they say the total assets of the firm of Amar and Akbar is 6 lakh and the cash is 40,000 in it. So what are the remaining assets? It is 5,60,000. Here you can see. This is the balance sheet that we are preparing as a part of answer. A paragraphed form question is given, from which the very first thing that we are preparing is a balance sheet. Yeah? And they say the total assets are 6 lakh. 40,000 is cash. Cash is written here, 40,000. So the remaining assets are 5,60,000. Yeah? So total is 6 lakh. So this side is complete. Yeah? Then they say proportion of capital and general reserve is 4:1. Net assets are 4 lakh. Okay, what is the formula for net assets? It is total assets minus total liabilities. Yes? So let us check the working notes. Net assets equals to total assets minus total liabilities. So we have answer for net assets. We are also having an answer for total assets. So what are the total liabilities that we are supposed to find out? So liabilities are given here. And the formula says total assets minus net assets. What are total assets? 6 lakh. What are net assets? 4 lakh. This is both given in the question, 6 lakh and 40,000. So what is the amount of liabilities? 2 lakh. How did we obtain this? We have obtained this from this formula. Alright. So let us place this in the balance sheet. Liabilities 2 lakh. Cash 40,000. Other assets 5,60,000. 6 lakh and 2 lakh here. So what about remaining? So liabilities side first of all consists of capital, then reserves and surplus and liabilities, of which we have obtained the amount of liabilities, which is 2 lakh. Yeah? Okay. So now talking about the remaining capital and general reserve. We have to find out the amount for that. So let us understand that first. Total of asset side equals to total of liabilities side. Obviously, the total of both the sides of balance sheet is always identical. I repeat, the total of both the sides of balance sheet is always identical. It is same. So if the total of asset side is 6 lakh, then obviously the total of liabilities side is also going to be 6 lakh. And from those 6 lakh, 2 lakh is for liabilities. So remaining is for capital and reserve. Obviously, on liabilities side, you are always having three things. The capital, reserves and surplus, and the liabilities. So the very first thing that we know is the total of liabilities side is 6 lakh, just because the total of asset side is 6 lakh. Now on liabilities side, the total liabilities are 2 lakh. So the remaining is 4 lakh. 4 lakh is about what? Is about capital. Capital of whom? Of Amar and Akbar. And the reserves. So 4 lakh is the amount of capital and reserve. Now we are supposed to find out that what is the amount of capital from 4 lakh and what is the amount of reserve. So for that we are already provided with an information that the proportion of capital and reserve is 4:1. Yeah? So 4 lakh is divided in the proportion of 4:1. And you have obtained the respective amount of reserve and capital. Reserve is of rupees 80,000. Capital is of rupees 3,20,000. Yes? How? We have split 4 lakh into 4:1. I repeat, we have split 4 lakh in 4:1, which is the given proportion of capital and reserve. Alright, so we have obtained we have obtained amount for reserve and we have also obtained an amount of capital. So let us write it down. in the balance sheet, capital is of 3,20,000, reserve is of rupees 80,000. Now the question is, from 3,20,000, what is the amount of capital of Amar and Akbar? Alright. Okay, so the information for that is given ahead. The capital of Amar is excess to capital of Akbar by rupees 80,000. Yes, the capital of Amar is excess to capital of Akbar by rupees 80,000. So what they are trying to say is कि अमर का जो कैपिटल है वो अकबर से 80,000 रुपीज़ 80,000 रुपये ज़्यादा है. तो सबसे पहले I should be aware of the fact that what is the capital of Akbar. But I don't know what is the capital of Akbar, and that is the reason I will suppose the capital of Akbar as X. Basic math. And on that basis, I will write down that what is Amar's capital. They say it is excess to Akbar's capital by rupees 80,000. Yeah. So X plus 80,000. Yes, the capital of Akbar is supposed as X and the capital of Amar is supposed as X plus 80,000. So the very first thing that we are supposed to do is find out the capital of Akbar. Okay. What is the total capital? It is 3,20,000 as per our calculation. So 3,20,000 equals to Amar's capital. What is the capital of Amar? X plus 80,000 and the capital of Akbar, X. So X, the capital of Akbar, and plus X plus 80,000, capital of Amar. And what actually is the amount of capital? 3,20,000. So 3,20,000 equals to 2X plus 80,000. Yes? So if you will apply the basic math rules, you will obtain the amount of X as 1,20,000. And what is X? It is the capital of Akbar. So what is the capital of Akbar? It is 1,20,000. So now what is the capital of Amar? X plus 80,000. So 1,20,000 plus 80,000, which obviously gives you 2 lakh. So the capital of Akbar is 1,20,000 and the capital of Amar is 2 lakh. Yeah, so let us write it down in the balance sheet. 2 lakh and 1,20,000. Alright. So 3,20,000 here, 80,000 for general reserve and liabilities 2 lakh. Yeah. Cash 40,000, other assets 5,60,000. How? 6 lakh minus 40,000. So the total of both the sides of balance sheet is 6 lakh and identical. So we have prepared the opening balance sheet for the given question. Alright. So now the next step that we are supposed to start with is preparation of the necessary accounts, of which the very first account is realization account. We have understood this concept while understanding the concept of theory. Yes, the concept of theory, which says the preparation of necessary accounts at the time of dissolution, of which the first is realization account, partners capital accounts, partners loan account if any, but there is no loan in the given sum. So loan account will not be prepared. And lastly, cash and bank account. Yes? So starting from the debit side of realization account, the very first thing written on debit side of realization account, it says do sundry assets account 5,60,000 and by liabilities account 2 lakh. Okay, this concept we have understood while understanding the concept of journal entries, that all the assets accounts and liabilities accounts are to be closed at the time of dissolution and are to be transferred to realization account. So assets are of rupees 5,60,000 and liabilities are of 2 lakh in the balance sheet. Here liabilities, the assets. You might question that, ma'am, what about cash? But if you remember, I have clearly instructed that the amount of cash balance is not to be closed and transferred to realization account. So all the amounts except for this are to be, all the assets except for cash are to be closed and transferred to realization account. Alright. So that is the reason we have considered assets as 5,60,000 and liabilities as 2 lakh. We have closed this and transferred to realization account. The journal entry for closing the accounts of assets, realization account debit to sundry assets account. That means all the assets, all the other assets. So in journal entry, assets have been credited. So in the process of posting, they are written on debit side. 5,60,000. Same for liabilities. 2 lakh. So what is the next step? That you are going to sell these assets. Yeah, you will sell these assets and you will pay all the liabilities. So the journal entry for the sale of an asset is by cash account. It is posting. The journal entry is cash account debit to realization account. But your question says that there is a loss of rupees 80,000 on realization. So assets are of rupees 5,60,000. Yes, assets are of 5,60,000, but they have realized 80,000 less. There is loss. So 4,80,000. 5,60,000 minus 80,000 gives you 80,000. And the remaining loss here, 80,000. Yes. So now the journal entry for payment of liabilities. Liabilities are of 2 lakh and nothing is instructed about how much is the amount paid towards liabilities. So the amount is 2 lakh again. Whenever nothing is instructed, it is to be considered that the book value is paid. Is that clear? So the journal entry for payment of liabilities is realization account debit to cash account. Yes. So to cash account is the posting 2 lakh. Yeah. I repeat, this is the 5,60,000 for assets closed and transferred to realization. Liabilities closed and transferred to realization. We have understood journal entries for this. This is just the posting for same. This is the realization of assets. Why it is 4,80,000? Because 80,000 is loss on realization. So 5,60,000 minus 80,000, 4,80,000 and 80,000 loss. Loss is to be distributed among partners in their profit sharing ratio. If profit sharing ratio is not mentioned, it is to be considered equal. This is the rule that we follow in each and every chapter. So 40,000 loss each, Amar and Akbar. And this is the payment of liabilities. Total of both the sides is 7,60,000 in this manner. Yes, so it is simple. The next account that we are supposed to prepare is partners' capital accounts. Now again, this is not a new account. We have been preparing it well in the chapter of admission as well as in the chapter of retirement. Yeah. So the very first thing to be written on credit side of partners' capital accounts is always the opening balance of capital. The opening balance of capital is rupees 2 lakh and rupees 1,20,000 respectively, the one which we have obtained with necessary calculations. In the balance sheet we have written, we have obtained this by assuming X as a capital of Akbar, and then on such basis we have obtained the balance of capital of Amar. Yeah. So this is the opening balance of capital. Then here is the loss on realization transferred from this account. Yes, loss is to be transferred to partner's capital account and on debit side. Simple. Okay. So the next thing that we have written on credit side is general reserve. Where does this come from now? General reserve 80,000 is here. Also this is obtained by us on the basis of necessary calculations. So 80,000 is the amount of general reserve, and if you remember how to deal with the balance of general reserve at the time of dissolution, then it says that it is to be credited to partners' capital accounts in their profit loss sharing ratio, which is 1:1 taken here because it is not mentioned in the sum. Whenever the profit and loss sharing ratio of partners is not mentioned, it is to be considered equal. Yeah. So general reserve is credited in partners' capital accounts, 40,000 each distributed equally. Fine. There is nothing else left to be recorded or written, or to be written in partners' capital accounts. Yeah. So now the step is to total this account. What do? The total of whichever side is more, you will write it down on both the sides, and amount of difference is treated as the closing balance of capital, isn't it? If you consider chapter 5 and 6, but that is not the case here. Here the firm is closing down. So there does not arise any sort of question of carrying balance forward. No. The amount is to be paid to the partners in cash. Yes? So 2 lakh and 1,20,000, the balancing figure is to be given in cash. Yeah? And the total on both the sides is same. Total of credit side is higher, 2,40,000 minus 40,000, balancing figure 2 lakh paid in cash. Same for Akbar. Total is 1,60,000 minus 40, 1,20,000 paid in cash. Alright, so this account is also done. So the next account and the last account of this sum is cash account. So as per the rules, obviously you will write down to balance brought down 40,000, the opening balance. Yes, this is given in the balance sheet. I mean, it's not given, it is given in the question and we have written in balance sheet. Just the way you have written opening balance of capital, you are supposed to write down the opening balance of cash. Yeah? And this is the second effect for the payment of cash to partners. Here, to cash. By Amar's capital account 2 lakh, by Akbar's capital account 1,20,000. Yes? Because we have prepared partner's capital account and also cash and bank account. So the related effect will appear in both the accounts. So if you are writing in partner's capital accounts to cash, then obviously in cash account we are going to write Amar's capital account, Akbar's capital account with respective amount. This just shows that how much is the amount that is paid to partners. Yes? Okay, so now talking about by realization account and to realization account. Okay, this is the realization of assets. This is the payment of liabilities. The effect for this too is already given in realization account. Journal entry क्या है आपका? For the realization of assets, it is cash to realization. So in realization account you have written by cash, and in cash account you will write down to realization account. Simple. Same applies for liabilities. You have paid liabilities. Journal entry for the payment of liabilities is what? Realization account debit to cash account. So realization account debit to cash account. So in cash account, it is by realization account, 2 lakh. The simplest rule of posting. Chapter 9 as per the new book of Standard 11th. The chapter is ledger posting. Yes, I expect, उम्मीद है कि आपको ये चैप्टर आता ही होगा. And if not, then please take that textbook of 11th standard and go through that chapter first, and only then you can learn this chapter, okay? Fine then. So we are done with the preparation of cash account here. The total of both the sides is 5,20,000 and the sum is complete. So let us check the homework for today. Illustration 9, of course, that you have done in this, that you have learned in today's lecture. And from exercise question 4, sum number 6, 7 and 8 and question 7. But firstly, you will have to understand and you will have to solve illustration 9. Only then you can solve these many questions. All of them are related. In one question, they are going to ask you just prepare balance sheet, and in the other, they are going to ask you just prepare realization account. So in short, illustration 9 that you will understand, on that basis, these short questions will be asked. In short, I am trying to say that if you will understand illustration 9, then it is not difficult for you to solve these sums. So here we end our chapter, that is chapter 7 from part 1. We have completed this chapter today, and from next session we are going to start obviously with a new chapter. But before that, make sure that you have completely understood and you have learned, you have watched all the video lectures related to chapter 7, and also you have prepared a proper fair book for the same. Yes, please revise all the lectures of chapter 7 till end, and please do your homework regularly. Alright then, we'll end the session here today. And we'll see you all soon in the next session with a new chapter. Till then, please stay home, Study well and stay safe.